Halo, halo. Tes, tes, tes. Hey, everyone. Can everyone hear me? Test, test. Okay. So I will start the sharing now. Hello everyone. You might have guessed from the title. This sharing is about you trading using Pendle. Okay. Let me guess. Right. Some of you might be very eager for me to dive into you trading right now, immediately. But maybe some of you could also be like, okay, what in the world is you trading, right? Why do I have to care? And yeah, maybe I'll give this guy like 30 seconds to convince me to continue watching, or I'll just close the video. Maybe you might have heard about Pendle. You might have heard the term you trading before, but you are not exactly sure what in the world is you trading. So to answer that very first questions of what in the world is you trading, why do you have to care, and why do you have to do it, right? Basically, what we are trying to achieve here is really to optimize your use. That's the whole point why you should use Pendle. And you trading is just the method to optimize your use. So yeah, in short, this whole life sharing is really about how to optimize your use using Pendle. So anyway, what does optimizing your use means, right? It means that you are holding some asset, say ETH, and you want more of the asset. You want more ETH. You want to grow your ETH. You want to get a higher yield APY for your ETH. In short, you want to maximize APY on some assets. That's basically optimizing use. And in DeFi, the status quo right now is for you to put your asset into some yield generating pools to earn yields over time. For example, you might put your ETH into SDE to get the ETH staking yield, or you might deposit your ETH into Aave. So using Pendle, the gist is you can use some DeFi magic to squeeze out more use on top of a yield generating pool. So like for SDE, if you use Pendle, you will have more ways to get higher use than just normally putting your SDE into Lido. So yeah, without further ado, let's dive into how to optimize your use using Pendle, right? In general, there are three ways to optimize use using Pendle. The first two ways are more basic and beginner friendly. However, I will claim, right, that you will already beat most use in DeFi just knowing these two. The two basic use, the basic ways are to get fixed yield and to provide liquidity into Pendle. The third way to use Pendle is to do yield trading. It's more advanced with higher risk, but also higher rewards. This is where you can potentially optimize your use to significantly higher levels. Um, the first way to optimize use using Pendle is to get fixed yield, right? So yeah, very simple. You can just go to the earn page in Pendle, and you can already see the fixed yield that you can get on certain assets. For example, I can see that I can get 8.5% fixed yield on in DICE term right now from the GDI pool in Pendle. And yeah, I can already like directly say um, put in say 100 DAI, and yeah, I will get like roughly 5.4 DAI of fixed yield um, in 230 days, which translate into 8.4 fixed APY. So yeah, I can just send a transaction and approve, and I can already get the fixed yield from the front end. Um, so yeah, now there are four things you should note about getting fixed yield. Okay, let me just go through the motion and get the fixed yield first. So yeah, In general, there are four things you should note when getting fixed yield. Firstly, the fixed yield you are getting will fluctuate over time. So the number that you see on the front end here for GDI will fluctuate over time. Today it's 8.5%, but tomorrow it might be 9% or 5%. So naturally, you will want to get the fixed yield when the fixed yield is high, right? And you are basically happy enough with the fixed yield. For example, it could be that you are very lucky one day, the fixed yield on GDA is suddenly off the chart to like 20% because someone traded wrongly in Pendle, right? And you can just go in and scoop up that 20% fixed yield, and you are set for 230 days of 20% yield on DAI. So yeah, that's the first and second point. The third point is that in general, it's good to get fixed yield if you predict that the APY is going down. For example, if you think that GDI APY in general is going to go down, which it is going down right now, then yeah, it might be a good time to get like the fixed APY on GDI. The last but also very important point about getting fixed yield in Pendle is that your capital is not locked at all. You can actually exit early at market prices for your position. Like for example, my position just now, I can already, I can always exit partially or fully into DAI. Um, yeah. So your capital is not locked until maturity. So yeah, that's the first way, the first basic way you can optimize use using Pendle. Let's move on to the second way, which is to provide liquidity into Pendle. Also very simple. You can just use the Earns UI, click into the liquidity tab, and you will see the different options for providing liquidity into Pendle. For example, I like the GLP pool. I can click into it, choose the maturity, and put in whatever asset I want to put in to provide liquidity. Okay, now you might ask, right, what exactly is the Pendle pool that you are providing the liquidity into? I will provide a very brief explanation. So intuitively, it's okay. Let's take the example of the Pendle SDETH pool. Intuitively, it's a pool denominated in SDETH that facilitates new trading for SDETH. And because it's denominated in SDETH, you are mostly just exposed to SDETH price, right? And so that's almost no IL concerns. There can be a lot of details about why there's no IL concern and how a pool works, but I won't cover it in this sharing. I will link some materials in the description of this eventual YouTube video. But intuitively, by providing liquidity into a Pendle pool, you will still get the base XTE and you also get swap fees and Pendle incentive on top. Therefore, right, if you are already holding STE anyway, putting it into Pendle will just give you extra free use, quote unquote free use, right? It's not exactly free because there's extra smart contract risk involved. But if you ignore that, yeah, putting if you exclude that, putting STE into Pendle will just give you extra yield on top of the normal STE yield. So and in general, right, it can also be generalized to other yield-bearing assets supported in Pendle. So if you are already holding some yield-bearing assets, putting it into Pendle will just give you extra use. And so in a way, you have managed to optimize for more use by providing liquidity into Pendle. So yeah, that's uh, the two basic ways to optimize use using Pendle. Now comes the third way to optimize use, where the real magic happens. Let's talk about yield trading, right? This part will be relatively heavier, but yeah, I will try my best to make it interactive and interesting. Um, First, we need to understand a bit of mechanics about YT and PT. Let's just stay at this example and you will understand. Say we have one SDE, we hold it for 1 year, and yeah, we end up with the same one SDE and a bit of yield, right? Say 0.05 SDE. The one SDE is called the principal, and the 0.05 SDE is yield. Yeah, very straightforward, right? In Pendle, you can split the initial one SDE into one PT, short form for principal token, and one YT, short form for U token. By holding one PT, you will get the one SDE principal after the 1 year, or the maturity. By holding one YT, you will get the yield generated by the one SDE from now until the maturity, which is in 1 year in this case. Uh, so yeah, let that sink in for a bit, right? The principal token gives you the principal, and the yield token gives you the yield. Yeah, that's the very brief explanation for YT and PT. To make things even easier to understand, right? Let's use this analogy. Say we have a chicken that lays eggs over time. Say after 1 year, we get the same chicken, um, the principal, and 20 eggs that has produced over the 1 year. The 20 eggs is the yield. So in Pendle, basically, we can perform a magic that will split the chicken into a chicken without its butt and the chicken's butt. The chicken's butt is the YT that will keep shooting out eggs for 1 year and disappear. Basically, it gives you whatever eggs that the chicken would have given you. Now, the chicken without butt is a PT. It is not a full chicken, but it will grow back its butt and become a full chicken again after 1 year, after the maturity. Yeah, that is exactly how YT and PT works, using chicken as an analogy. With that, right, let's dive straight into the first strategy in yield trading, trading PT. Okay, the first thing you need to remember is PT is equivalent to fixed yield. Buying and holding PT all the way to maturity gives you fixed yield. How so, right? Say PT is valued at 0.9 SDE right now. Well, after 1 year, the PT will become the full chicken, right? The full one SDE. Um, 0. That means that we are going to get 0.1 SDE in fixed return over the 1 year. That will translate to 11.1% fixed yield because the capital is 0.9 SDE. And so, yeah, that's how buying and holding PT is basically giving you a fixed yield on your asset. Now, the second thing you need to learn about PT trading is this pricing guideline. High fixed yield is equivalent to cheap PT, and low fixed yield is equivalent to expensive PT. How so, right? Let's say one PT is 0.8 SDE instead of 0.9 right now. This means that you will get 0.2 SDE over the 1 year, and it's equivalent to a fixed yield of 25%, a 0.2% return on a capital of 0.8. So yeah, cheaper PT, 0.8 instead of 0.9 is equivalent to a higher fixed rate of 25% compared to 11.1%. So yeah, cheaper PT is equivalent to higher fixed yield and vice versa. Now, As with all other kind of trading, you want to buy low, sell high, right? So you want to buy cheap PT and sell expensive PT, meaning you want to buy PT when yield is high and sell it when it's low. And in other words, right, you will profit from yields going down. If you have profit from yield going down, essentially buying PT is shorting yields because you profit from yields going down, right? Um, yeah, that's the rough theory you need to understand for PT. But I think the easiest way to understand everything is to just let me just show you how trading PT is like in practice. So exactly how you can trade PT on the trade bed. Okay, I usually like to use the this rows table view because it's easier to compare the different numbers. And on this market page, the most critical number we should look at is the implied APY column. So what is implied APY? In short, right, implied APY is what people think is a fair yield from now until maturity. In other words, it's the yield level that is being traded in Pendle, and it's also the fixed yield that you will get. So, like for this SDE market, maturity is end of this year. Implied APY is 3.69%. So people in general are thinking that the average yield from now until December this year is going to be 3.69%. And it's the same as the fixed APY. So if you buy PT, you're also getting exactly this 3.69 fixed yield. Okay. Now remember just now, buying PT is shorting you, right? If you're shorting you will want to short something that is overvalued, correct? So what we want to do is to look for the implied APY that is higher than what it should be. And among these different markets, the GDI market caught my eyes. Why? Because without looking at everything else, right? A fixed APY of 8.5% on DAI is already pretty attractive to me. Yeah, it seems pretty attractive to me, considering like how the DAI saving rates is only 8% right now, and they are even voting to lower it, right? So just for that fact, I really think that this could be an interesting case for, say, buying PT. So yeah, say I'm interested in this token, in this market, and click into the PT trading page. Um, yeah, and what's more, I can see from the chart that the underlying APY, meaning what GDAI has been giving in APY, has been dropping over time, and it's only at like 5.68% right now. So shorting yield seems like a pretty good case here. Yeah, okay, just for the sake of example, yeah, let's say I think it's a good opportunities to buy PT to get this fixed yield, and say I put in 10 DAI to buy 10 or roughly 10.5 PT. Essentially, this is giving me a yeah, fixed return of 0.52 DAI, which is equivalent to 8.2 fixed yield, right? So yeah, I can just go ahead and buy the PT. And yeah, that's how I enter into a fixed yield position. Okay, now let's talk about the game plan, right? The game plan for trading PT should be, there's always a baseline scenario. What is the baseline scenario? The baseline scenario is to buy PT and hold all the way until maturity. And by doing that, I will be realizing the fixed APY. For my case just now, I just managed to buy 10.5 PT GDI, right? My baseline plan is I'm just going to hold this PT until March 2024, and I call it the fixed yield. and my return will be 8.5%, probably 8.5%. And for the baseline, it's already pretty good, right? At least to me, getting a 8.5% fixed yield on dime. So that's the baseline scenario. Now, on top of the baseline scenario, there can be a better scenario to exit my PT position when implied APY goes down. Implied APY goes down means PT is expensive, like if you refer to the pricing guideline just now. So yeah, let's just say for the sake of example that right now I bought I got 10.5 PT to let's say in 1 week. For some reason, maybe people also realize that this fixed yield is too attractive, and people will keep buying PT. Say by next week, implied APY already dropped to like 7%, and I can already exit my 10.5 PT to get say 10.15. That means that I just earn a 1% return, absolute return after just 1 week, and that translates into a 67% APY for the week. And so for the better scenario, I can always exit the PT position earlier for a short-term profit, and that will basically squeeze out more effective APY for my total position. So yeah, that is exactly how you can trade PT. Yeah, that's how you can trade PT by having a very attractive baseline. The baseline scenario should already be pretty good um, and pretty safe, and you have very good upsides in case um, the implied APY and the market moves like in the direction that will profit your PT position. So yeah, that's all for trading PT. Next, let's talk about YT trading, right? YT trading is um, the more degen kind of yield trading. It gives you higher rewards, but it has a higher risk as well. Before anything, let's have a refresher on YT. YT is basically the chicken's butt that keeps shooting out eggs, right? All the way from now until maturity. Yeah. Again, YT is the chicken's butt that keeps shooting out yields all the way from now until maturity. So in this example, say, and YT can always be bought and sold in Pendle. So imagine that you buy this chicken butt for 10x, and after 1 year, it produced 20x. That's basically 100% return, right, on your capital. Yeah, that's a pretty good return. However, it could be the case that say you buy the chicken's butt for 10x, expecting it to produce at least 10x in the 1 year, but turns out it only produced 8x in the 1 year. And that means you have lost 20% of your capital. So yeah, higher risk, higher return. But in short, we can note a few important things. Firstly, YT is equivalent to yield exposure. Yeah, by holding the chicken butt, you are getting yields in terms of egg from one chicken, which could fluctuate up and down, right? Today, the butt might generate 2x, but tomorrow it might only produce 1 egg. But yeah, you are basically exposed to the amount of eggs that chicken is producing. The second point is that buying YT is basically longing yields. You are betting that yields will go up. You are betting that the rates of producing egg will increase. The more the eggs are being produced, the more profit you will get, right, in the end. So yeah, buying YT is longing yields. And in terms of the profit for buying and holding YT, uh, basically the 20x minus the 10x, right? It's the realized yield minus the cost for buying YT. In new trading, the best way to look at things is wise terms. So the use is being realized over time is basically the underlying APY. And YT's cost can be measured by exactly implied APY, the number that we look at in the market just now. And implied APY is, roughly speaking, kind of the price of YT in APY's terms. You can think of it that way. Implied APY is the price of YT in APY's terms. And in other words, if you recall from the PD section just now, it's what people think is the fair average yield from now until maturity. Okay. Now again, the easiest way to understand things is to see it in action, right? Let me show you exactly how to check YT. Um, Again, let's look at the market page to spot undervalued YT. Okay, maybe let's look at NV chain. Again, right? Implied APY is the most important number to look at. Well, because implied APY is the price of YT, right? So if the price of YT is low, it's a good time to buy. That means we want to look for cheap implied APY or undervalued implied APY to buy YT. So the question you should ask yourself for every single market is, uh, say for example, this Binance Tech ETH market, right? The question should be, is the implied APY fair for this market? Is 3.31% a fair value for yield of Binance Tech ETH from now until December 2024, basically from 500 days? Yeah. And for this particular example, well, I would think that it's quite undervalued. Why? Because you can see that the current underlying APY is 4.27%. Um, and yeah, like basically the butt is shooting out 4.27% currently, but the cost for buying the butt is only like roughly 3.7%, right? Seems like a pretty good deal. Um, and the long yield APY is a quick gauge to see how undervalued YT could be. Long yield APY is basically the APY returns if you buy YT right now and hold it all the way, assuming that the underlying APY will stay exactly the same at 4.27%. Okay, let's look at the YT trading page for this market to see more details. What you want to see here is the trend in the underlying APY, which is the gray chart here. The trend in how much egg has the chicken but been shooting out, right? Like how much you are getting in like the actual use versus the cost for buying the YT, which is the implied APY. Yeah, and if you look at this particular market, the underlying APY has been consistently at least 4%. Sometimes it goes up to like 5.7% uh, over time. So yeah, it looks so. And meanwhile, implied APY is only 3.31%. So I would say, personally, I would think YT looks pretty undervalued here. And yeah, I like this trade. So yeah, I can just put in the amount I want to buy YT, say like 0.05, and I can see the details for my potential trade, especially the potential, the return I will get from buying this amount of YT and hold it all the way until maturity, which is 19.2%, assuming that the underlying APY will remain constant at 4.27%. Um, and yeah, I would recommend. Okay, you might say that but maybe the underlying APY might not stay constant at 4.2%, right? Maybe it can be higher, can be lower. And the best way for you to gauge is to use the calculator. I would recommend using the calculator. And how exactly you can use it is, yeah, just put in the potential amount you want uh, to buy YT for. The market is already auto select for you, and this box is your assumption on the average APY until maturity. Right now it's at the market price, so let's just see how it goes, right? And yeah, if it stay at this level of APY, you are going to get 19.1% on your YT. If you think that finance tech if yield is going to be even higher, like say 4.5%, you can also calculate and see your potential return. Or if you think that maybe finance tech if yield in the long term could only be maybe like 4%, you can also calculate and see if it's worth it. And yeah, you can see that even in the case that underlying PY is 4.0% in the long term, this trade will still get you 13.5% in terms if you buy YT and hold it all the way until maturity. So yeah, that's how you can look at the numbers and potentially execute a YT trade. Um, yeah. Okay. Now let's talk about the overall game plan for YT. Okay, let me just do this trade first. So for the game plan for YT trading, the baseline scenario is to enter YT at a good price, right? And hold it until maturity. Exactly what I did just now. That would be say the baseline scenario. Uh, I would just be holding this amount of YT finance it, and I will just collect you over time. And if my prediction is right, like just now, uh, yeah, like say my prediction is APY is going to stay at least 4.0%. I will still be getting at least 13.4% on my YT trade. So that is my baseline scenario. And as with PD trading, there can be an early exit scenario where, say, tomorrow for some reason, the implied APY for Binance Take It shoot up to like 4%. And that means that my YT price will also shoot up like significantly, say like by 5%. I can just exit and sell the YT to get the short-term profit. Uh, that could potentially translate to very high APY overall. You can and actually many traders in Pendle have been doing exactly this for good returns. Um, because YT prices generally fluctuate more widely. For example, if you look at the GOP market, which is the most actively traded market so far in Pendle, say you look at the price chart for YT GOP, you can see that on this day, 13 July, yeah, like you could have bought YT at roughly 8.4 cents and sell it 3 days later at roughly 10 cents. And that is like uh, an absolute profit of 20% in just 3 days. So yeah, if you do it well, trading YT can be pretty lucrative if you know what you are doing. So yeah, to recap, the game plan for YT is to enter at a good price, be prepared to hold all the way, and if the price swing in a favorable direction, you can always early exit for potentially a quick return. And so that's the gist for how you should trade YT. Okay. Um, Now, other than trading PT or just trading YT, you can also keep switching between longing you and shorting you. Basically, when you think that implied APY is overvalued, you can execute the short use strategy, staying in PT. And when implied APY is undervalued, you just switch to YT and start longing you. You can also switch between YT and the LP position because LP position is also a short yield position. So there's a few last notes from me of how to trade you. Firstly, there are two keys to a successful yield traders. First, being able to predict future use, like knowing the underlying pool well enough to be able to predict future use. Say, for example, for some reason, you can travel from the future and you know exactly what STETU will be like in the next 1 year, right? Yeah, then you have a much higher chance of getting a good profit by in yield trading. The second point is being able to time your trades well. Like say you have a general direction that STETU is going to increase in the future, right? That means you might want to long you in general. But yeah, if you are able to time your YT buy at very low implied APY, your profit will be significantly higher. So yeah, that's the two keys to successful yield trader. Um, with that, I have some final remarks about yield trading before I move on to the next section to share about my general take on some market. Um, ultimately, yield trading can optimize your use to significantly higher levels if you know what you're doing. And you can probably see from my demo, baseline scenario are not hard to execute, and it could already get you pretty good use if you know the basics. So yeah, that's my last two final remark about yield trading. And yeah, that's all for my crash course on yield trading. Any question before I move on to my personal take on some market like right now? Okay, I guess people, many of us are waiting for the personal take. So yeah, I move on to my personal takes on some of the market right now. Firstly, yeah, I need to talk about this STE December 2024 on Ethereum. So if you look at this particular STE market, what do you see? Yeah, right away you can see that among the STE market, this particular market has significantly higher implied APY compared to say the 2027 or 2025, and also the other STE market on Arbitrum. And so if you look at the market, um, yeah, you can see that STETU in general has been hovering around roughly 4% and lower than 4%. So yeah, this implied APY of 4.26% is relatively high compared to like the other market sentiment on STETU. And yeah, and you can see that one of the reasons why it's so high is some people, some will bought a lot of YT and shoot up the implied APY to like 4.7%, and it has been going down ever since. Um, so yeah, if I have to pick a side, right, I would say this is a pretty good case for getting a fixed yield of 4.26% on STE for 500 days. Um, because of how, in general, other people in other market have been pricing SEU to be lower. And personally, I do think that such a fixed yield for 500 days is very good for STE, especially when you're just getting like 4% and below nowadays on STE. And yeah, and that is the baseline, right? And who knows, like maybe the market is just inhibition, and eventually this implied APY will go down, and you can potentially do a short-term like early exit if implied APY go down. So that's my opinion for this particular SEE market. But yeah, by the way, yeah, these are just my personal take to demonstrate some of the yield trading concept, it might not necessarily to be true. And yeah, no financial advice. Next one is the abstract ETH market on Ethereum. This market is interesting in the sense that without looking at any other details, just the raw 4.9% fixed yield on ETH terms is very attractive to me. Um, yeah, even though the underlying PY has been higher and everything, but if you just look at the perspective of getting a fixed yield, you are potentially getting 4.9% fixed yield on ETH terms, more specifically in fixed ETH terms for 500 days. So if you think that fixed ETH is good, um, and there will be nothing wrong happening to fixed ETH in the long term in 500 days, I would say that getting this fixed yield for 500 days on ETH terms is also pretty good. Yeah, that's my opinion for this particular market. Next one is the USDT market on Ethereum. For this particular one, yeah, it just straight away a very relatively good case for longing you. If you look at the underlying APY for this pool, it has been mostly above 4%, and it's trending up as well. Um, and the implied APY is only like 2.9%. And you can see from the long APY that it's 24%. So yeah, let's demonstrate how you can use the calculator. Um, yeah, like you can try putting in like some amount of um, AUSDT, and you can see the effective APY. Um, yeah, so this is also interesting. Oh yeah, another details about the last two market I talk about, especially say STE 2024, right? Is that if you look at the calculator, you can you can you can get the fixed yield for pretty good size. Like say I can, if let's say I buy 100 STE worth of fixed yield, I can get yeah 4%. I move the market a little, but not as much. And 4% on 100 if a fixed yield is also pretty good in my book. Yeah, so let's move on then to the next market, which is basically the USDT market in Arbitrum. And similar to the Ethereum market, the long yield APY is also very high, and you can see that underlying APY has been consistently higher. So I would say this is a pretty good case for a stable coin in you uh, to basically buy YT in this market, assuming that the underlying APY will be consistently higher than like this current level, which is 3.2%. Yeah. Next one, GLP, the very popular market. In the long term, I don't have, I'm pretty neutral about the direction for um, GLP use because we are still very early uh, in like the launch of GMX V2. So we are not exactly sure how the new the new pool will affect like APY in the GLP um, pool yet. So I'm relatively neutral in the long term, but in the short term, if I have to pick, I would be more bearish on um, GLPU in general, just because of how volatility has been lower, and as of today, the predicted APY for I mean MPR for GLP next week is only like 3 point something percent. So yeah, for this market, I'm personally neutral in the long term, but more bearish on you in the short term. Um, yeah, next is GDI. I've already stated my opinion just now, which is yeah, pretty relatively bearish on um, G9, you especially when implied APY is relatively high at 8.5%, which has been consistently higher than the underlying APY for some time. So yeah, it could make for case to for shorting you. And lastly, the SDE short-term pool. If you have been following these two particular pool that expire in December 2023 and June next year, has been pretty actively traded in Pendle. And you can see that the implied APY has been following underlying APY quite closely. Um, and the trading volume has been very high as well. So for the immediate action to be made, right? I don't think there's a very strong case for either long you or short you. But what's interesting about this market is because it's very actively traded, I think if you have an opinion on the short term or medium term SDA view, it will be good to bet on it using this market because you will tend to follow the implied APY will tend to follow underlying APY. So say you predict that the volatility will come back in the next 2 months or something. It could be a good case to buy the YT for this market because if market volatility really picks up, underlying APY will go up, and because how people are very actively trading this market, implied APY will also go up, and you can potentially benefit from just buying YT now and selling YT then when the implied APY go up. Conversely, if you predict that this low volatility environment is going to stay all the way until December this year, it could be a good case to buy PT and just wait it out and potentially sell it when implied APY drops. Same goes for the June 2024 market as well. It has been getting uh, quite a good amount of trading, and it's relatively the implied APY generally follow underlying APY direction. So it's the same case for the other market as the other market. All right. Yeah, that's all for my personal take on the different markets. And yeah, I guess it's been a pretty long sharing as well. So if anyone have any open questions, please feel free to just send it in the chat, and I will see and yeah, I try to answer. Um, I'll give it like maybe a few minutes for any people who want to ask any questions. Well, I guess I take it that I've explained well, so there's no need for any questions. So yeah, I guess that will be the end of my live sharing for today. Um, this will be available as a video on YouTube afterwards. So yeah, if you want to share it to some friends, you can we will share the link to the video sometime in the future. So yeah, thanks everyone. Bye bye.